Hey guys, Mike here. So I gotta say, today was one of the more interesting days. I have not seen more news-driven movement in a long time. Some was good news and it moved certain things up, right? Some was not so good news and it moved some things way down. Okay, and some of those might have been the Mag 7, right? And so we're gonna get into a bunch of stuff on this one. We're gonna talk about, first of all, financial conditions, a very important one. Something that's been happening with the 10-year, what's it been doing with the financial conditions, not what it's supposed to do, okay? And so that's one reason the market is moving. Remember, liquidity, financial conditions, whether they're tightening and loosening, are huge. We're going to get into those. We're going to get into the big movers right after that and the news that was driving those big movers. But also to see underneath the hood, is this disease going to spread from the three stocks that got hit hard today? They're part of the Mag 7, maybe. I mean, obviously two of them are still there. One's a debate. Or is it just a one-off, right? Is it just bad news for the day and then we'll resume tomorrow, right? And so we'll see if that spreads or not. But when we look at this, you can see right here clearly what the 10-year has been doing, right? Yields have been going up to sideways, right, over the last 4 or 5 months, unlike there when you saw it tank, okay? But what has financial conditions been doing? I'm not surprised by this because, I mean, I talk about this all the time with the members and present it every Wednesday. Nothing. No tightening, right? And so that's why when that's happening, a lot of times you're going to see the market continue to resume up. Even if you're wondering, like, I don't understand how yields are up and the market's up. Because financial conditions are still either staying steady or loosening. They are not tightening. That's what we've seen over the last year, that even the interest rate hikes the Fed's been doing, has not been showing up, okay? Not yet, at least. Maybe it will. What's the other thing we've been talking about? Now we got RSP, the equal weighted ETF, set a new all-time high today. It did not hold into the close, but it set a new all-time high today. And so that gives us the S&P 500, the NASDAQ Composite, the Dow Jones, the RSP, the QQEW, which is the equal weighted QQQ ETF, all now have at least hit all-time highs, along with Japan. That one just hit another all-time high. All these other stock markets around the globe hitting all-time highs, okay? And so we got them all down. Let's see where we go from there. We talked about RSP, when it normally sets a new all-time high, a lot of times I showed you in the chart where it kind of double tops and starts to sell back down. So we'll see going into what's supposed to be weakness when it comes to seasonality, which we have not seen yet, if that is the case. And so going into the big pumpers for the day, you had SMCI. This thing just will not stop. Everything that's going to stop, it goes up. Why did this go up? Because I talked about this thing is too big for the Russell 2000. It's going to go where? Into the S&P, and the news came out. Boom. I think it was actually after Friday's close. And so it popped more than 25%. It is going to the S&P. If you happen to know, and I've been asking people this, I cannot find anything, give me a date. This will trade on March 18th on the S&P. I need to know when it's leaving the Russell 2000. The reason why I need to know that is because I have a question for you at the end. You'll see why it's very important to understand when it's leaving the Russell 2000, okay? And so NVIDIA, again, this one got all the way up. It pumped again, okay? Up to this trend line, that's where it sold off from the day. It hit that again. It's been going that since the beginning of 2024. Once it hit that, sold back down. I'm actually going to move this level up from here. I'm going to move it up to right there. And so we'll see if this thing ever shows any weakness, but that's the level I'll be looking at to be broken to show official weakness. And so we'll see, or we get the bounce. Now, the one that absolutely is stunning a lot of people, and the reason why, and I'll show you why this is happening, obviously AMD continues to go straight up, right? Now, this is one of the more constructive charts on semiconductors I showed you in the past. It would move up, it will consolidate sideways, it would set what? Support level, and then continue to bounce up. Okay, very constructive, very beautiful move. Now all of a sudden, it's going straight up. Why? This is what we call a gamma squeeze. All right, this is what is happening in AMD. Hadn't seen it before, now all of a sudden it's going absolutely haywire crazy. Okay, and what people believe is happening is NVIDIA got so expensive that other people, especially retail, are just rolling into AMD, and they're buying a lot of call options is what they're doing. This forces market makers, for those who are new, they're the ones selling us the options, right? They're the sellers, we're the buyers. As that stock starts to gamma squeeze up or starts to go up really fast, they have to hedge their position by doing what? Buying the stock, so it brings extra buyers in the market. And of course, whatever shorts are there, which I don't know why people be shorting right there, those shorts also have to cover, and it creates this gamma squeeze. This is what we saw with Tesla for years. Okay, that's how it moves. What else? AMD got a price upgrade from Barclays up to 235 from 200. So that is fuel on the fire to help squeeze this even higher and higher. Okay. Now, of course, it wasn't just those three semiconductors. Obviously one pulls the whole crew up. That's NVIDIA once it goes green. And so ON is the only one that's actually lagging, which I don't know anything about that one. But, the rest of them are green. Make sure you pay attention to Taiwan Semiconductors chart if you ain't looked at it. And, the one that was shocking was ARM, right? This is the one we talked about had a breakout. Well, we thought it broke out Friday. And instead, it literally just really didn't do anything. It was actually slightly red on the day, which is kind of surprising. This is the one where their stock will come available to be sold from the people who bought the IPO on March 12th. And so we were kind of figuring out, you're going to squeeze up before that happens, or is it going to drop before that happens? So let me know what you think in the comments on that one. Now, for the ones that were huge turds today, and what we really need to pay attention to is this disease going to spread, or is it just a one-day event, or is it just confined to these three stocks in particular? Please hit that thumbs up because it helps people find this video. And if you like financial content where somebody does not try to make themselves seem smarter than they are and talk over your head, please hit that subscribe button. I really appreciate it. All right, moving on. And the first one's got to be Tesla. That thing got crushed today. It was down about 8%, as you can see, falling out of that rising, expanding wedge right there. And, I told the members this morning, I said, wow, look at this range we've been in. I wonder if we're going to hold and start to bounce back up and go to the high of the range. And as soon as the market opened up, that wasn't happening because what happened? Once again, the gift that keeps on giving here, China, their sales fell in February. As you can see, the sales data dimmed the outlook for Tesla's global deliveries at a time when the EV maker is battling a decline in demand and weighed down by lack of entry-level vehicles. And when you look over here, this kind of tells you the data. They sold 60,365 China-made vehicles, down 19% from a year earlier. And you can go through and look over this if you want to. But the important thing was, looking at the chart, it dropped down between 180, 188. Why is that important? Because this right here, you've seen it go down there many times. So that was support. What they do, they saved it right at the end of the day and moved it back up and retested that like 180-ish level to see if it held. And it held at the end of the day. We'll see if we get that bounce back. If we get above 192, this thing's going back to fill that fair value gap right there tomorrow. And it was just going to be a once-off thing, at least for now. But, of course, China weighed down everything. Their own stocks, EVs, you name it. It is the cancer that keeps on giving, right? And so, again, their economic data looks like hot garbage. The EV sales didn't look good. So, really no surprise there. And so that's why none of these stocks really seem to get a lot of traction. Now, what's another stock that don't do well because of China? Apple, right? This one, the market's been rallying. Apple's been coming down since December of last year, right? Finally broke that level today. Again, this was news driven. And when we look at it, they're fined nearly $2 billion in Europe over some streaming apps to do with music. And so the market did not like that. Of course, it saved it at this level right here. It had a bounce right there. No surprise there. It is Apple, so I'm not surprised. And so it needs to bounce there, because if it doesn't bounce at that level, which is around like 173, 174, you can see it can drop even farther down to 166. Also, it has the 2023 all-time low anchor VWAP, or the opening year anchor VWAP 2023 right there, which it bounced off of as well. And so you got support there. You got some confluence right there. But if it loses that, then a lot of people will probably be targeting that 166 area, which they have done in the past. And so, but again, what's the market doing? Is it just going to be confined to Tesla and Apple, or are we also going to see the same thing happening here with Google, which is what happened today, right? This is the third stock. You can see this one. Obviously, it's already fallen out wedge. We knew that. And when you look at this one, it got saved by what? 132.31 was the place to be, right? That's where the volume steps in. And so you can see that it is good support for it. We'll see if it gets a bounce back up to around 135 and that volume gap right there. And, going back over, we'll point the MACD here. I just want to look at it and see if it's below the zero. And you can see, once it falls below the zero, that's usually when your bears are taking over, right? They're really trying to push this thing down. And so, the bears are in charge right now on Google, especially if they get below this level. And so it's Tesla, Apple, and Google, right? Part of the Mag 7. People call it the Mag 5 now, because they're kicking Tesla out, one other out, and they're adding Bitcoin as a fifth, just FYI. But whatever you want to call it, again, this needs to bounce. Apple needs to bounce. Tesla needs to bounce. Or because if they start going down even further, you would think they're probably going to drag down Microsoft and a couple others with them. And because they have such big weights, you're going to need a lot more stocks to step in for them. The other thing Google hit was the 200 moving average. That was another thing that saved it. So again, breaking the 200, the old saying, nothing good happens below the 200 is a true thing. So let me know in the comments if you think these are going to bounce. Now that leads me to IWM. Obviously, another move up today. It was up at one point in time like 0.85%, I believe it was, leading all the indexes. And really what you see more than anything, this thing has been stair-stepping its way up, all right, going towards, that 210 area right there. But my question is, and the big question I think a lot of people need to answer very seriously is, if SMCI is accounting for so much of this move, and you can see it right here, I'll zoom in for you. It accounted for 8 points. Mr., obviously, which owns all the Bitcoin, accounted for 2. So that's 10 of the points to move up today. Look at the other stocks. They account for hardly anything, all right? So if SMCI, who I've showed you before, accounted for the majority of the move this year alone, moves out of the Russell 2000, this is why I want to know the exact date they're moving out of, what's going to be pushing this ETF up to these levels then, right? I mean, I can see it getting there eventually, but with the move it's had, it's kind of like a meteoric type ride because of that one stock. And even Mr. I mean, Bitcoin eventually is going to chill out, start setting a level, maybe pull back. What's going to push it up? So that's my question. That's why I'm really pushing hard. I've been trying to find sources to show the exact date it's moving out. Or is it just going to wait to the reconstitution? Because you can trade on multiple indexes, right? You can be a part of the S&P 500 and the NASDAQ at the same time and all that stuff. So, maybe it's going to be part of both until we do the reconstitution, which I believe is in the summertime. Okay, and that would allow it to benefit from the SMCI's move. But if it moves out this month and just goes to S&P and doesn't stay in the Russell 2000, I mean, you got your biggest player by a country mile leaving. And that's not a good thing, right? If you're a team and you're a home run slugger, a baseball team, and you're a home run slugger who has, 60% of your home runs is leaving, well, odds are people are going to pick you to win, right? And so that's the reason why I'm asking. So please let me know if you have a source. Don't just tell me a date, what source are you getting that from? Because I would love to know, and I'd appreciate it in advance. Now, last thing on your earnings and your economic data. Obviously, NEO, Target, it's going to be reporting, and then we're going to have CrowdStrike, ChargePoint, Ross, Nordstrom's reporting. And so nothing major tomorrow as far as the earnings are concerned, but the economic data you will have after the bell opens, of course. S&P Global Composite PMI final and Services PMI final. And then, of course, we'll end up with a lot of ISM Services employment and new orders data and PMI, so pay attention to that one. And then, of course, more Fed speakers will be talking. So there's no earnings this week that should do anything. A lot of high beta stuff, a lot of retailers, that kind of stuff. And tomorrow I'll show you some different things to show you, particularly what's been moving the market. Also, we'll pay attention again to the seasonality chart to pay attention to see what we might be seeing here or not. But again, this might just be, it was bad news for these three stocks. That's what drove them down. And we've seen how many times they bounce back, right? And they're setting at these key levels to get the bounce, right? And so if not, if you do get a correction, that's normally what you see is you'll see 3, 2, 3, 4, the big ones go down. Then it'll spread to the rest of them, right? To get your pull back to 3, 5%, whatever you get and stuff. If that's the case. And if not, if it's just a news-driven thing, then up and away we go, right? So we'll see what happens. But again, March is going to be extremely volatile. You got, I think Jerome Powell speaks twice this week, if I'm not mistaken. I know he testifies once, but I think he speaks somewhere else too. So it's just going to be all over the place this month, especially in March. So anyway, hope you guys got something out of it. Hit that like and subscribe button, and I will see you tomorrow. Have a good one.